What's going on, guys? Welcome back to another video. So in this one, we're going to be kind of going over how these large institutions are wildly and aggressively just annihilating retail investors each and every day. But I'm also going to give you the tools on how to actually take advantage of those institutions when you see these things start to fire off. So again, what we've seen in the past out of retail investors is they're really good at picking when these stocks are going to have significant increases. They just also happen to be not so good at taking profits on some of these plays. So I'm going to give you the guys the tools in order to actually do this. So if you guys are interested in retail investor empowerment, if you do want to see retail investors succeed in this market, let me know. Hit that like button on this stream, leave a comment down below, and hit that subscribe button if you guys do want to see more videos like this. But let's get right into it here and kind of talk about a couple of these situations that have been playing out over the past couple of weeks. So this first one right here is going to be MEGL. Now, in order to fully understand MEGL, we also have to talk about HKD or AMTD Digital when they had their IPO and they ran all the way into the thousands. Now, then people started to kind of talk about this next stock that was going to be IPOing, MEGL. And you started to hear the language that, in my opinion, is the most dangerous in the kind of retail investor world. MEGL is the next HKD. That is incredibly dangerous to say to a group of investors who are looking to make a bunch of money in the market when you see these types of things happen each and every day. Now, yes, you could have made money on MEGL if you got lucky, you played the pump, and you did know how to take profits early enough. But if you didn't, this is what ended up happening. From the peak, you are down, let's see here, just on shares, about 95%. Now, in order to kind of understand how the institutions are actually doing this to some of these shares, you have to understand how the IPO process actually works. So when we come over here, there's a kind of the steps to an IPO. You have the proposals, the underwriter, but the marketing and updates part is one of the most important pieces that you guys need to understand. Marketing materials are created for pre-marketing of new stock issuance. Underwriters and executives market the share issuance to estimate demand and establish a final offering price. Now, it's just an estimate. On the day of IPO, the underwriters, when they're selling these shares and facilitating these transactions, still have to gauge demand in the market. Now, when we're thinking about what we're looking at in every single time an IPO happens, if they then kind of undersell it and don't sell as many shares as they need to, just thinking about basic supply and demand, well, then the stock price rockets. Or if there's just so much demand that is going to outweigh the amount of supply that the underwriters are allocated to sell, the price rockets too. But there's something else that can happen that a lot of people don't know about that you should. It's called a green shoe option. When we take a look at exactly what a green shoe option is, it's an over allotment option. In the context of an initial public offering, it's a provision in an underwriting agreement that grants the underwriter the right to sell investors more shares than initially planned by the issuer if the demand for a security proves higher than expected. So these green shoe options are built into a lot of these IPOs. So almost no matter what, when you see a stock start to rip after it IPOs, well, that means that there's more demand for it. So they're probably going to exercise this green shoe option and sell more shares than they were originally supposed to, tanking the price. So that's what these institutions do on these IPOs in order to kind of, one, make more money, and two, manipulate the share price back down to a normal level. Now, another really good example of this that has happened, and it's not an IPO, but it's something a little bit different, and this is actually how we take advantage of movements like this in the market, was REDBOX. So let's throw this on the 4-hour time frame here and take a look at REDBOX. When you look at what has happened with REDBOX over the last few weeks, you have to understand the risk and reward with trading stocks such as this. Is there a high potential for reward? Yes, but you have to trade smartly. Retail investors are way smarter than institutions and kind of the media gives them credit for. It's kind of time to show them how smart we actually are. So when we look at this right here, we have the 1348 cross above the 200 EMA. Now looking at REDBOX here, and you are following the rules and kind of following along all of the teachings that we've been giving you guys over the last 6 months, and that's kind of one of the reasons why everybody's been so successful with this in our group. If you look at this trade right here, you can see that REDBOX spikes, rims, spikes again, and then finally gets that closing candle below that 48 EMA. But what is the percentage return on shares, even if you are entering at a reasonable at kind of a reasonable entry here? Well, that's about a 46 to 50% return on just shares. Now, think about options. That would have been absolutely insane if you were holding options through that time period. Now, if you look at it again here, when REDBOX starts rimming back up past that previous resistance, well, you can do this again right here. Breaking resistance comes all the way up here if you top ticket up over 100% on shares. But if you're following the rules here, you're still up 41% on just shares. Now, if you didn't know this and you didn't understand exactly what was going on with the chart, and you kind of had either like a lapse of judgment, or you just didn't understand what was going on with this chart right here and the full depth of these situations, from the peak all the way down to where it's trading at right now, that's a 90% loss. Retail investors should not be taking losses like this, especially with other retail investors supposedly coming in and saying that these stocks should be going to 100, 500 to 1,000. Now, again, guys, if you do want to actually learn some of these things and make sure that you can kind of take control over your own portfolio, make sure you check out that link down below. Our most recent algorithm that is about to get released caught one of these moves, and it was actually on Bed Bath & Beyond, and that happened actually this week, which was really, really awesome to see. So if you guys do want to be provided these tools, and if you do want to go through all of that learning, we have over 55 private live streams every single month, of 16 learning curriculum videos to actually teach you this strategy, alerts on over 450 stocks in the market on multiple different time frames, stocks and cryptos, because again, retail investors, and they did take full advantage of this move, but the vast majority of them kept holding on, and now it's at $1.70 from the peak in the $18 range. There is no reason why retail investors need to be getting screwed over by these institutions each and every day. It's time that we kind of take advantage of these opportunities out in the market and make sure that we can kind of do the best that we can for not only ourselves, but the people that we kind of care about too. We want to make sure that, one, we take advantage of this move here. That could be the only trade you make for the month. You're done. So again, if you guys do want to kind of check this out with us and really join our community, make sure you check out that link down below. Again, if you guys just want to put these on your charts, that's great too. If you really want to take it seriously and get that learning and be a part of our community and use the tools that we are providing you, you are more than welcome to hop in with us. So again, that's kind of going to wrap up this video, guys. Again, the analogy that I like to use when you're kind of entering some of these really, really risky YOLO plays is the alligator analogy. So what happens when we have the alligator analogy is that, let's just say there's an alligator, or it's a crocodile, with its mouth open like this. And you just decide, let me just put my head in it real quick and hope everything goes well. Most of the time, it's probably going to have a 90% loss. So again, guys, I just want to make sure that everybody has the tools to kind of go forward and make sure that they can navigate these markets, because there is so much opportunity out there. And I just want to make sure that you guys can take advantage of it. So that's going to wrap up this video, guys. If you did enjoy the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it helps us out a whole lot in getting this information out to as many people who want to learn. And again, guys, if you do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. Other than that, I'll see you guys in the next one. Peace.